Freeman as well and find out what he's making of the global structure right now. Seth, hi, good morning. Good to have you on the show. I guess it's all eyes now on Fed, and it seems like they're on course for a 25 bips cut.
Well, according to a collection of analysts, it looks like there's about an 85% chance, and it reflects the combination of lower inflation expectations, as well as frankly some constrained employment growth.
Okay, and Seth, therefore, give us what your near-term outlook is. Where terminal rates go, where the U.S. Fed is concerned, where do you see that pause at?
Well, the expectation is a rate cut. What does that mean going forward? It is going to be very dependent on the final numbers, I think, from the holiday season. What's not getting much press, surprisingly, is that a huge home improvement chain, Home Depot, filed for Chapter 11 on Friday. And the key reasons are because of significant softening in terms of post-COVID consumption and home improvements, and much higher construction prices for homes. And that, in my opinion, we might see some reaction to that this coming week as analysts start to look at what the implications are of that.
Seth, how are you looking at retail buying, because consumer confidence is also on a lower side, and given all these macro conditions ahead of the Fed meet, do you see the Fed there is a 85% chance of a rate cut coming in, but do you see the Fed opening the doors for further cuts going forward?
Well, it's very interesting. Besant says that we've had a robust holiday season so far, but the fact is U.S. consumers are fairly tapped out on consumer credit. So I don't know how much buying power consumers really have, but sentiment is very, very important here. And unless real core prices start to decline, I mean, prices at the grocery store are still very high, despite what Trump says, and other prices. So I really do think we're going to be looking at January, February post-holiday to see if maybe a small surge of holiday buying can push the economy. On the other hand, we had the shutdown for a while, and there is some thoughts that the quality of the data that the Fed is looking at and the government's looking at may not be complete.
Said also, if you can give us a sense of the entire consumer confidence which is there in the US. You have a Treasury Secretary who is talking about a 3% growth in 2025, but at the same time you have consumer confidence and buying retail buying confidence is coming down. So how do you look at the entire macro situation there, and from a market's perspective, how do you see markets moving from here on?
Well, we all know that markets are future oriented. It's based on expectations, and we're hitting all-time highs. So traders at least think that, and maybe retail investors think that the next quarter, next 6 months, and maybe the next year is looking good. There was some news over the weekend that there's an expectation that the Dow and the Nasdaq are going to continue, and the S&P 500 are going to see significant gains in 2026. So professional investors, at least, think it's looking good.
Right. Okay, Seth, great to have you on the show. Thank you so much for your time today.
Thank you.
Okay, let's just revisit